Alright, so you clicked on this video because you're interested in investing in the stock market utilizing ETFs as your main investment vehicle, which if you've watched any of the content on my channel over the past couple of years, then you know that I myself believe this to be a fantastic course of action for most passive investors. In fact, based on the data and touted by Warren Buffett himself, I would agree that ETFs could provide everyday investors with among the best returns over time in relation to the actual effort required to even invest in them in the first place, which is very low. So in today's video, we'll be discussing some important elements relevant to investing in ETFs here in Canada that you need to be aware of as a new or intermediate investor. And thanks to TD Direct Investing for sponsoring today's video, but more on them later. Alright, so exchange traded funds, typically referred to as their acronym ETFs in the industry, are both a popular and also potentially suitable investment vehicle for everyday DIY investors for a reason. ETFs are simply a grouping of individual financial securities into one common fund based on a variety of specific goals and criteria of that one fund in question, to then be divided up once again into individual shares of that fund that can be traded on the stock market like any other stock that you're used to. In fact, buying and selling shares of an ETF is really no different than individual shares of a stock throughout the trading day in your own self-directed brokerage account, as we can see here, where I'm simply selecting the amount of shares I'd want to buy for this given position. Additionally, what makes ETFs so versatile is their sheer variety in the market and ability to be tailored to an endless combination of investment objectives, which is why there are now hundreds of ETFs available to choose from in the market, with investment goals such as, say, North American equity, emerging markets, high dividend yields, etc., that will then hold individual positions in that fund relative to the goal in question. As the investor, though, this means that you can identify the investment goal that you're specifically after and then select one of these already thought out options available to you for investing simplicity. Alright, now I speak about ETFs quite often on the channel because I believe they offer investors quite a few advantages over other investment vehicles such as, say, mutual funds or even individual stocks in question. The first and main benefit being the fact that, again, holding one or two ETFs exposes your portfolio to hundreds, sometimes even thousands of individual positions, all with one single click, which essentially means built-in diversification to different companies, market sectors, or even positions from different countries. And when it comes to investing, it's important to understand that generally risk and reward are tightly correlated, and that the higher the risk, the higher the potential upside reward as well. But when it comes to stock market investing, one of the most important factors is your portfolio's total return over time in relation to your risk tolerance, regardless really of the individual positions that you're invested in, which is why ETFs have become a fantastic option for DIY investors. This higher level of passivity that ETFs offer investors can also be an advantage for many by limiting the time required to keep up with rebalancing your portfolio over time, which can be very time consuming if you own a handful of individual stocks. What's more is that I wasn't kidding earlier when I mentioned the fact that for most everyday retail investors, ETFs can provide some of the best consistent returns achievable considering their level of passivity. In fact, the data even shows that when comparing average returns over time of the S&P Composite 1500 index, which covers roughly 90% of the entire American equity market, to actively managed funds that pick and choose individual positions with the goal of outperforming the broader market, results are often less than stellar in up to roughly 80% of calendar years. And these are professional investment funds, not DIY investors like you and I. Essentially what this means is that beating the market is much easier said than done, which is why passively managed ETFs truly offer stock market investors a viable way to ride the growth of the overall market or even specific facets of the stock market over time. In fact, over the years, as we can see from this chart, the amount of capital that's flowed towards ETFs as an asset class has skyrocketed, further encouraging growth across the industry. And finally, we need to also consider management fees, which tend to also be a favorable component that ETFs have to offer, with generally lower management fees than what, say, mutual funds will charge investors on an annual basis, because most passively managed ETFs simply follow a market index rather than holding positions that are bought and sold by fund managers actively. So for this reason, it isn't uncommon to see management expense ratios as low as 0.06% for passively managed exchange traded funds on an annual basis, which represents as little as $6 on a $10,000 investment. Now, before we speak about identifying and selecting ETFs that meet your needs as an investor, I'm sure you're wondering how you can even go about buying ETFs in the first place, which luckily is really simple. You can do this through practically any self-directed brokerage account, but this is specifically where today's video sponsor, TD Direct Investing, comes into play. One of the most important things to understand about the world of investing is that everyone's needs and goals will be vastly different from one another, and they'll also change over time as you go through new chapters in your life. So it's for this reason that a self-directed online brokerage such as TD Direct Investing that can support your evolving investment goals is so important for long-term investors. In fact, TD Direct Investing features a large range of investment products such as US and Canadian stocks, exchange-traded funds, mutual funds, and even other investment vehicles such as GICs, fixed income investments, and options trading. What's more is that their platform's main dashboard allows for personalization with certain customizable features such as watch lists and charts to allow for a quicker and thorough assessment of your portfolio's performance based on what metrics matter the most to you. I've personally been using TD Direct Investing for over 5 years at this point, and their platform has been great to help me achieve my financial goals along the way, such as buying my first house and building a dividend portfolio to create a new income stream. So if you're looking for an all-in-one investment platform to finally start investing for the long term this year, check out TD Direct Investing using the top link down below in this video's description. Alright, so we're now familiar with how to go about purchasing an ETF, but we need to also consider what makes an ETF worthwhile in the first place. And the short answer is that everyone's investor profile and risk tolerance is going to vastly differ, which is why one ETF may or may not be suitable for your needs as an investor. Above everything else though, selecting ETFs really just comes down to what you're after as an investor, either long-term growth, dividend income, exposure to alternative markets, or asset classes. All of these come into account when selecting an individual ETF. Additionally, which ETFs you even choose to move forward with will ultimately depend on your desired asset allocation in relation to your investor profile, which come down to factors such as your age, your investment horizon, your short and long-term goals, etc. Now here's the thing, it would be impossible to cover a large range of ETFs in this one video, but a good starting point if you're a new stock market investor would be to look at what I consider to be core exchange-traded funds. These include ETFs that can act as a solid foundation to your portfolio and provide the potential for long-term growth, low management fees, and diversification across many industries and individual positions. For example, funds that track the S&P 500 index or the entire stock market for that matter could be considered to be a core ETF position that many investors may choose to allocate a sizable portion of their portfolio to due to the passive nature of this type of index. By the way, I've made many videos on the channel specifically diving into core ETFs and dividend-focused ETFs. I'd highly encourage you to check out those videos after watching today's video if you're interested in creating your own DIY ETF portfolio. Now, once you've selected one or more of these core ETFs to make up your portfolio's base, well, it's at this point that you may want to explore secondary ETF positions. These focus on specific sub-facets of the market as a whole, such as, for example, an international equity ETF or even a dividend-focused ETF, all of which can provide your portfolio with targeted exposure to specifically what you're after. So I hope today's video gave you a good idea of how you can approach investing in exchange-traded funds right here in Canada. Thanks again to TD Direct Investing for sponsoring today's video. If you want to open up a self-directed brokerage account with them, make sure to check out the top link down below in the description. Additionally, I'd encourage you to check out my free stock market investing course over on Skillshare. It has over 7 hours worth of content and it's entirely free for you to view on a 1-month free trial over, once again, on Skillshare. You can find a link to that course down below in the description. So thanks a lot for watching today's video, and on that note, I'll see you in the next one.